We've got Vikas Khemani as well joining in on the show from Carnelian Capital Advisors. Vikas, it's a naya saal, nayi shuruaat, and a naya look for you as well. I see you're clearly donning a new avatar, and let's understand what the next Samvat is going to bring in store for the equity markets, because it's been choppy to say the least so far. And while we've had that underperformance, we've had that downtick. What I mean is there's been that outperformance compared to the rest of the globe. Do you like the term decoupling, or do you think that given the way things transpire, it's very difficult to actually stay away or go against the tide? Your views on how India has performed?
Clearly, India has done very well. If you see from last summer to December, exactly around the time of Diwali, there was a lot of optimism, there was a lot of positivity, and after that, we saw Fed raising interest rates significantly, inflation numbers surprising, Ukraine war playing out. So I think despite all those sort of situations, India has kind of held on to it and kind of is flat from the last year. This clearly shows, and where most of the markets are down 20%, 30%. So India has clearly outperformed, and it is no surprise because today, whatever the problem happening elsewhere, India does not get much impacted with that. In fact, some of them are working for India at the growth stage where we are. If commodity prices fall, it works for India. If India demand scenario is not a problem. Some of the trends where as China plus one, Europe plus one kind of situation, which is playing out, which works very well for Indian manufacturing sector. So all those things are only offering well for India, and they are only incremental, more catalyst of growth. So I do feel that economically speaking, India has kind of held on well, done well. We have seen tax collections number coming up that clearly shows that what's happening on the ground and in reality. Of course, you are a global village. Globally financial markets are interlinked. So it will be very wrong to say that if something happens in the US, we will not get impacted at all from a financial market perspective. But the good part is that financial market implications can be short-lived, but economic implications generally tend to long-lived. So once the worry about or the global macros for developed markets settles down or plays out over next 3 months, 6 months, I do believe that things should come back to sort of normalcy on those things as well, and India should continue to do well. I have no doubt in my mind.
Yes, hi, good morning. This is Anisha also joining in, and season's greetings to you. So India should structurally be a strong position across the world. But, over the last 1 year, if you look at the Nifty performance, we are down, around 5%. And even at the portfolio level, it hasn't generated much return for the investors. Going forward over the next 1 year, over the next Samvat, what should be a reasonable expectation from the equity markets with respect to returns? Can we see those double-digit returns at all, you think?
Absolutely. I have a very, very high expectation of Indian markets from here delivering 18-20% kind of return from next Samvat for two reasons or three reasons, I would say. One, I feel that interest rates and inflation has peaked out across the globe. They might, in expectation, actually they might peak out in next 2 or 3 months. More or less, we know that Fed, base effect is playing out, commodity prices are coming down. So, the inflation on inflationary expectations will tend to play out, and that will give comfort to the policymakers to, remove the hawkish stance. So, and a lot of it is already in the price or in the market. So, and the next 3 to 6 months, that should also kind of be behind us. Secondly, India, like I was saying, that tends to benefit from what's happening across the globe. We don't have any major share in the global trade, so to get impacted, as an economic, so our earnings growth, I believe that will remain by and large robust, except some sectors like commodity might get impacted, but which is not a very large part of the earnings. Also, most of the large sectors are doing well, and I don't see anything changing there on that front. Thirdly, I am very, very positive on the FPI flows. We've seen last 12 months or 18 months massive amount of flow going out. Thankfully, the domestic money supported, and it has never happened that such a large scale selling happened and markets still held on. That's another good thing about, by the way, last 1 year of market. But going forward, if you see, typically most of the FPIs withdraw money from emerging markets when Fed starts raising interest rates, Fed starts tightening. Because the typical playbook is that when the Fed raises rates, emerging market currency weakens, and thereby they import inflation and their economic growth starts impacting. So, in expectation of the negative return, most of the FPI investors withdraw money from emerging market. It's a typical playbook, and they return when the interest rates or the tightening cycle has peaked out. This is I mean, many times over in the last 3, 4, 5 decades we played that. So I do see that, like I was saying, the FPI flows will return once, whether it could be next 2 months, 3 months, I don't know that part. But I know if I were to take a 1 year out, I have very, very high confidence on FPI money coming back, and especially towards India, because India is one of the most promising emerging market. But in general, emerging market money should come back. As dollar index has kind of peaked out, so dollar weakening also will start playing out, which works very well for currencies. So if you take the combination of strong liquidity from the domestic players, strong liquidity from the international investors, combine this with the stable and robust earning environment, I see no reason why Indian markets will not do well over next 12 months from this Diwali to next. So I would reckon that we have a very good shot at hitting Sensex of 70,000 or so. Anything between 18 to 20% can happen. These are the very, very high probable scenarios that I would say.
Vikas Khemani, good morning. So you're saying Diwali se Diwali tak. So are you predicting 70,000 for the Sensex next Diwali? Did I get that right?
Yeah, I think it's a very high probable scenario. For the reasons I just mentioned, that we now whether it will happen before Diwali, on Diwali, I mean that time. I mean just broadly, I'm just saying that in next 1 year we should definitely see a very high likely that we will see 18 to 20% kind of output.
And when you see that 18 to 20% growth, what should one ride on? 2020, 2021, it was IT. You, such a big IT bull, remaining an IT bull, you also trimmed your IT position. I remember earlier this year, we said it'll be the year of the banks. So for that 18 to 20% growth, what are you riding on?
So clearly, I think banking will do very well. We are in an early stage of credit growth coming about. Last 2, 3, 4 years, we were struggling with the NPLs and capitalization issues and all. I think all of them are behind us. Fortunately, the credit cycle has picked up. Most banks are growing between 18 to 20% of their book, and rising interest rate environments does help them in terms of margin expansion. So I see this environment remaining very robust over next few years, and I think this year itself, from this Diwali to next Diwali, entire banking basket would do well. Second sector, we think that automobiles, which had after a 4 or 5 year period of no demand or very little growth, is beginning to grow. Post IL&FS crisis, pandemic came, then chip shortage came, so we haven't seen really any growth coming in the entire sector. And I think that sector is also looking very, very promising, and valuations are reasonable, not very expensive. So one can look at that for sure. Thirdly, we have seen investment cycle, capex cycle picking across the board, especially on the manufacturing side. China plus one is playing out. So industrials and manufacturing is a very big basket, and across many, many segments and sub-segments, I do believe that that theme will continue to play. That will do very well. I mean, it's a decadal theme, and I see no reason why it will not do well in the next 12 to 18 months, because whatever is happening elsewhere, again is benefiting to these companies, and rupee depreciation only in some sense helps. And if you read even China recent policy statements, they are lot more focused on domestic economy. They are reducing their reliance on the export part. So in that sense, naturally India will get benefit of that. So manufacturing is one of the big theme. I think one will play out. I am not bearish on IT. I think IT corrections have happened significantly. Expecting that demand will slow down. But if you look at the order book or order wins of most of the IT companies, which is a precursor or indicator towards what impact it will have on of the slowdown or recession if US were to happen today. Any company which is awarding an order is not is worried is knowing that US might go into recession, and still they are awarding an order which is higher than last year same quarter. It clearly tells you that demand is not that issue. So I think IT is going through that passing phase, and in every structural cycle, every sector goes through a passing phase. So I would say IT also will do pretty well. Of course, in a shorter term, medium term, market might take different views, and it might not outperform, it might not deliver 18-20% return. But
Right.
IT safe sector, so can deliver 12-15%. So these are the sectors we would sort of play out.
Okay, fair enough. Looking at that overall capex theme, and that could all go well for industrials. But look at where the currency is. And, in Nikunj's conversation with Madhu Kela as well, he said that there's a lot of opportunity in beaten down pharma and that this space presents, a very strong buy opportunity. They've added their weightage here. Would you concur with that? Is that a sweet spot according to you, particularly on the way the currency is shaping up?
So I think pharma definitely looks attractive from a valuation standpoint of view. And if you have to play contra, it's a good sector, no doubt on that, because it's a defensive sector. Valuations are corrected, expectations are very low. But at the same time, it's not that you have a great visibility on the demand coming through. So those breakthroughs are still not, sort of have not happened or has not happened. So, it can disappoint on your timing or can disappoint, but this reward from a 3 to 5 year perspective, definitely pharma looks interesting. Not only currency perspective, even in general, currency of course aids to the overall comfort. But currency, in my opinion, will start appreciating once the right now rupee is where it is because of dollar strength. And if the hypothesis which I played out, or interest rate peaks out, and in next 3-4 months, it will have to reverse. So dollar weaknesses will again make sure rupee will be strengthening. So I don't see this level sustaining over next 12 months.
Vikas, before we let you go, just let me try and put you on a spot and ask you your multi-bagger idea for the next Samvat. I know you've talked about a lot of themes, but if you had to narrow it down to one stock, what would it be? I see your top holdings in the likes of ICICI Bank, L&T.
Yes, so they continue to remain well within all these themes. I think there are lots of ideas. So I mean, very hard to pin one idea. Companies like L&T, ICICI Bank. We recently added, IndusInd Bank, Aditya Birla Capital. All of them, according to me, will very well placed. Aditya Birla Capital is a large holding for us. We recently added. We think, from this Diwali, next Diwali, also it can surprise and can deliver superior returns. So there are lots of ideas. I mean, in our portfolio stock, but some of them, you're aware, and I just mentioned.
Okay, Vikas, on that note, we'll let you go. Thank you so much for joining us. And again, season's greetings from the ET family to yours.
Thank you very much for having me. Wish you and your viewers a happy Diwali and a prosperous New Year. Thank you.
Thank you so much.